Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, October 2nd. Sorry, I'm still congested trying to get over this cold and everything, so pardon my congestion here if it sounds like that, because I am congested. But why don't I get into it this morning? We do got a few economic news to go over, and we'll start with the market manufactured PMI for the month of September. So back in August, we had a 52.8 rating, and it jumped up to 53.1, which is a good sign for manufacturing on the markets. Now, we also got ISM Manufacturing Index for the month of September as well. Both of these indexes demonstrates anything above 50 is expansion, anything below is contraction. So, previous reporting back in August, it had a 58.8%. Forecast was supposed to dip a little bit to 58.1, and it jumped to 60.8 rating. This is the best we've seen since 2004, which is 13 years. So this is some great numbers we're starting to see right now, and we'll have to kind of watch, see if this continues or not. But this is a pretty hot number, and of course you'll see that the market's like this so far. Last but not least, we got construction spending for the month of August. So July it dropped down to 1.2%. August, it was supposed to go up to that 0.4, and it exceeded that to 0.5%. So, again, good overall numbers today. So, of course, the market's going to like that, and it won't be a surprise to see that the stock market is up. Now, of course, we had Las Vegas going on there. You think it would disrupt the markets. It did a little bit more. The casinos and some of the gun companies, and our thoughts and prayers are with those people who are affected with that Las Vegas shooting, by the way. It just keeps getting worse and worse. We see this is considered the worst in U.S. history, this mass murder, and now they're showing about 58 people, I believe, are dead, and about over 500 people now hospitalized from this. It's a pretty tragic event here, and sometimes you just have to ask yourself why that stuff like this happens. To kind of move on, we'll try to keep this light. We don't want to, of course, bring in all this negativity. So another thing that affected markets later in the day, Friday, which is also kind of playing into today, is there's a former Fed governor, Marsh, I think it was Warsh is his name, and he is thought to be possible replacement for Janet Yellen. Her term is up, and Trump has not yet given her any sign of support and may be replacing her. And this person is very hawkish, and the bond market dropped quite a bit on Friday after he was announced as a result. And he's been pretty critical of the Fed, feeling that the Fed has been more subservient, so to speak, to the S&P 500, letting the S&P, the stock market kind of dictate where the Fed moves. And so this could be, may not be too good for the stock market as well, as he's not going to want to give easy policy and please them, that he may be a little bit more tough. So again, that's kind of playing a part in the market as well. Spanish elections went on this weekend, and there's the election that's making it's not so much rippling here, but it could disrupt Europe a bit more. Catalonia basically voted to secede from Spain, and that's creating a big stir in Spain. So that could rise up another question about the euro and everything over there. Last but not least, the market is kind of taking its cue. They're still feeling good. We're still getting at highs on the stock market on hopes of this tax reform. So people are feeling a little euphoric about a possible tax reform, and this might be a little bit easier to get through than what we've been dealing with the healthcare. So hopefully we can come to some conclusion, at least get some progress with government and moving things forward. That helps everybody out here. All right, so let's go ahead and take a look here at the bond market, and the bond market is getting better. We're in a very tight squeeze here. As you can see, we are up about 8 basis points. We're in between the 200-day moving average and the 100-day moving average. We're up against the 100-day moving average right now and having a hard time getting above that. However, so basically pricing is not much different. There's really not a whole lot of difference because 8 basis points is not a lot. So pricing will be about the same as what we left off on Friday, or where we were on Friday. Now, however, on Treasury here, we're down for the day, but we broke above this 200-day moving average. We started up here, and now we're down. Now we're up about 1 basis point. So from where we left off on Friday, we're at 1 basis point higher. Now we want to try, hopefully get this close below the 200-day moving average, because if this breaks above, this becomes a floor, allows the treasuries to rise, yields rise even further, and with yields rising further, that's taking money from the mortgage-backed securities and will create higher rates as a result. So when we were back here, rates were much better, and as yields rise, it's taking money from mortgage-backed securities, and basically interest rates have been rising since then. So again, we want to watch this. This is kind of important factor here, watching here if we can hopefully get this to close below. Right now we're only about 1 basis point higher than this level here. So if we can get this closed at a negative, then we could be in much better shape here going forward for interest rates. So that pretty much concludes it for the day. I hope you guys have a wonderful day. But if you guys want to get more updates throughout the day, just come over to Twitter. You can find me at my handle at Mike Bjork on Twitter. And again, I hope you guys have a wonderful rest of your day. And again, our thoughts and prayers are for those in Las Vegas and all those families that were affected by this senseless act of terror, unfortunately. Again, it bedeviled. What's the word? Bedeviled. Bedevils me. It baffles me as to how something like this can happen. But again, I guess it's the world we live in today, and we just hope for a better tomorrow. All right, folks, you guys have a great day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.